Hi there traders, this is the week commencing the 28th of September 2020 Macro Watch, and we're going to look at stock staying week with Europe seeing record COVID-19 cases. So let's take a look first of all at the macroeconomic and geopolitical developments. While those COVID cases in Europe and the UK surging, rising hospitalisations as well in the major economies in here, France, Spain, Germany, UK, all getting hit significantly, and that's a real concern for economic growth going forward within the region and also obviously globally as well. This has seen further lockdown measures come in throughout Europe and the UK, either on a localised basis or across nations. Elsewhere, we've had the Federal Reserve speakers were in the spotlight last week with somewhat mixed messaging around the average inflation targeting. However, the impact on markets was muted, with US Treasury yields at the moment completely paralysed, Fed speakers having no real impact on those, staying super low. We also had Steve Mnuchin in here, the US Treasury Secretary, alongside Jerome Powell, testifying on 3 days, separate days in here before Congress, emphasising the need for new fiscal measures to help battle COVID-19. However, those fiscal measures not really on the agenda right now because we continue to have in here the real loggerheads between the Republicans and the Democrats, unable to agree on a new economic relief package, particularly as we're going into and towards the US presidential and also congressional election coming up in November. Another point of contention has been since the death of Judge Ruth Bader Ginsburg, the US political relations even further strained on the installation of a new member of the US Supreme Court, potentially before the US presidential election. And this is going to put strains on them being able to pass through any kind of COVID-19 economic relief package. Turning our attention back to Europe, some possible but only modest improvements in the EU-UK trade talks. But again, impact on markets limited, although the pound slide that we've been seeing has to some extent slowed. And whilst we're in the UK, Rishi Sunak, the Chancellor of the Exchequer this week, announced some new economic release measures on Thursday. However, again, impact on markets was relatively negligible. So let's take a look at the actual financial market developments in here for the week ending the 25th of September. So the Dow Jones Industrial Average alongside US equity indices pushing to further new lows, down 9% from the September peaks in here, and growing risk now of a deeper reverse, although we did get a rebound on Friday, but still a negative on the week for the Dow, the S&P and also the Nasdaq. And the European equity indices now starting to signify topping patterns in here, rolling significantly lower over the past week and looking potentially vulnerable to deeper corrections. Let's turn our attention to the Forex space now. The US dollar in this new kind of full risk off scenario has resumed its positive tone in here, having stayed kind of fairly negative or neutral in here through the mid part of September. Late September we've seen in here over the past week a strong move higher in the US dollar index and the US dollar rallying against most major currencies. Dollar up against the yen. The dollar really seen as the ultimate safe haven, the flight to quality currency in here now, even rallying against the yen in here, dollar higher against the yen over the past week in this risk off phase. And the dollar particularly in here rallying against the risk currencies. So here we're looking at US dollar, Canadian dollars, notably higher, dollar CAD, but also we've seen the dollar up against the Australian and New Zealand dollars, both those currencies losing out, going lower, notably lower in here over the past week against the US dollar. Those risk currencies getting beaten up in this risk off scenario, risk off phase that we're in right now. And although the pound weakness has kind of abated to an extent, we did see new lows in here over the past week for September, and the pound does stay weakened and does look vulnerable against the dollar going into late September, October. And even the euro, which has been holding in, now completing a technical head and shoulders top pattern in here, looking far more negative and aiming still deeper, still lower, going into the turn of the month, into Q4 2020, into October. Let's turn our attention to the commodity markets now. We were seeing a rebound in the oil market in here, but that stalled towards the end of last week and now more in a range environment, unable to re-energize back up to the peaks we saw back in August and looking vulnerable again. Copper has seen a significant setback from its multi-month highs in here, having posted those only in the mid to late part of September a week ago, but now setting back and looking more at risk of potentially a further correction to the downside. And finally in here, we're going to take a look at the gold future. The gold future having paralysed sideways in here through much of August and September since the early August sell-off, now breaking out of this consolidation range to the downside, being driven by US dollar strength. So US dollar strength equaling gold bearishness in here and gold pushing notably down through supports and looking more vulnerable. So let's take a look at the week ahead commencing the 28th of September 2020 in our macro watch. Well, we do have Thursday and Friday Chinese holidays with markets closed, and also notably in here closed for much of the week after that into early October. We have ECB President Christine Lagarde speaking Monday and Wednesday. On the central banks front, we have very little going on other than speakers, plenty of Fed speakers, and I say Lagarde speaking, but no significant central bank meetings or minutes being released throughout this week. And let's take a look at the data, though. The data really back-weighted to the second half of the week in here. Nothing really out on Monday. Lagarde does speak. We have CPI from Germany on Tuesday alongside US consumer confidence. Chinese non-manufacturing and manufacturing PMI comes through on Wednesday alongside UK GDP, German retail sales and unemployment. Lagarde speaking again on Wednesday. And from the US, we then get ADP employment, GDP and PCE data alongside Canadian GDP. Thursday, as we mentioned, is a Chinese holiday. Markets closed. We get the more important, the significant global market manufacturing PMI alongside the ISM manufacturing PMI on Thursday, with US PCE, personal consumption expenditure and jobless claims data also Thursday to kick off October. And then again, that Chinese holiday on Friday, Australian retail sales data, and then the always much to watch US employment report in here coming out on Friday, with the week ending with the University of Michigan Consumer Sentiment Index late Friday. I'm going to wish you all a great trading week. Stay safe out there, and I'll be back with you next week for another weekly Macro Watch update. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.